Yesterday, I had a very important press release, and I'm sitting down with Gary to discuss it. But before I do this morning, I sent out just a short email uh, summarizing what it means. So if you want to get it, sign up for my mailing list, and I'll send it to you. The link is in the description below. So, from the press release, we learned that Voxtur announced that it will be selling approximately half of Blue Water for a total price of 40 million US, which consists of 30 million cash and about 9.5 of earnout. And before the press release, Voxtur's market cap in US dollars was about 40 million US. So if you look at it, you're pretty much getting all of the other businesses for free, the way the market was valuing Voxtur before this press release. So Gary, I want to start with this. Are all the other businesses outside of Blue Water worthless?
Or it's not.
So so let's start with this. If you were, and I know you're not doing this, but if you were to just liquidate all the other businesses outside of the remaining half of Blue Water, what could you get for it? Because I know those businesses are generating around 40 million Canadian of revenue per year, but just give me an idea, because I know they're not worthless. But what could you get for them?
A lot of money. A lot of money. That's all I'll say. Listen, let's be candid with each other. Valuation, in the public markets is not an exact science. Valuations has an emotional tinge to it. It has factual tinges to it. And it basically also has projections, right? And I think that the issue that we had, and no one's fault but ours, is that we had debt. And many people, as you know, wrote us off some time ago. And I've talked to you many times over the last, couple of years. But most importantly, when, I took the helm about 15 months ago, it was important for me to be able to show everyone that we are a really good company and that we will, get back to where we should be. And the first primary ingredient was that we needed to find a way to eliminate the debt, or at least to get it manageable. And I think a lot of people, had a lot of doubt, because as you know, in the capital markets today, there's not a plethora of capital raises taking place right now. People have basically been burnt in a lot of ways because of multiples have changed, especially in the real estate technology space. Perceptions have changed, and some people choose to want to have the safe 3, 4, 5% return on the money, and others continue to stay true to what they want, and that is evaluate a company, determine where it's going, and make an investment based on those facts and observations. So in our particular case, I mean, we faced an industry that wasn't 2 years ago that we were valued at almost $900 million, and we weren't even a tenth of the company then that we are today. So a lot has changed, both perception and reality, from valuation in the public markets in our space. So what do we have? Well, first of all, the 40 million, which I am very confident, 39.5 to be exact, very confident that we will achieve, is only for half, right? So assuming that that there is some correlation between the two, we've got another basically 60 million Canadian or 40 million US, sitting there just for that business. But we have many other businesses that will and can fetch a substantive amount of money on the open market. And we have, as I basically explained to everyone, we have looked at what is strategic, what is not strategic. And in this particular case, it was a strategic move. Why? because the syndicate of owners that will be coming in to be our 50% partners are basically people that are in the business, people that are in the mortgage business, people in the mortgage warehouse lending business, people that will be raising, private equity to buy MSRs, people that are broker lenders, people that are trading in loans, on a regular basis. Once it's finalized, we believe that a lot of these representations will be in our new partners. And so what we have is not only the ability to continue to do what we've done, but we also have built in inherently a strategic partner so that we have a marketplace inside, of our existing business. And so we give up half to get 4 times more than what we're getting today. So we think it's a good trade. It doesn't happen overnight. I mean, obviously, the transaction has to get closed, number one. We do have to integrate all of those products, into our platform so that there'll be transactions that are taking place. A capital raise that is taking place right now to raise equity for mortgage servicing rights, etc., is underway, but certainly far from being closed. And so probably that'll take the balance of this year to get some form or fashion of what it's going to look like. And, and it goes without saying, we're continuing to sign on and load new clients every day. And, as I said before, the Blue Water team as a whole have done a great job in fighting adversity and coming through to the other side. It was a bit of a meandering way to get to where we are, a few bumps and bruises with the dissident action, etc. But sometimes things take place for a reason. Sometimes they're emotional with respect to reactions, and sometimes they're factual, and sometimes they're a combination of everything. I think that, we had borrowed $30 million to pay for Blue Water. And so essentially what we've done now is not only got that money back once it closes, but potentially another $9.5 million US. So we like that. We did give up some shares, and the share prices went down. So ultimately, when it's all said and done, Blue Water is going to be and remains to be a very viable, important asset as we go forward. What is also not mentioned is that although they are strategic investors, it does benefit Voxtur in a material way. Every time there's transactions that take place, they do need tax reports. They do need title changes. They do need pre and post close due diligence. They do, like I say, they are going to need valuations, right? So we think that all of the synergistic benefits of why we bought it in the first place is going to continue in a material way, and that goes all to Voxtur, not 50%. So we like the deal. We like our new partners a lot. The team at Blue Water are very enthusiastic about the opportunity, and I think that time will tell on how buoyant it will be. But quite frankly, here is a way that we could materially reduce the debt. Probably need some of that money for working capital until we get all the other things that we're doing right now out of the way. So we're not going out to raise money. So we like the transaction, and we're not finished. There are other things that are in the hopper that will provide us with cash flow and provide us with working capital. And I look forward to addressing your investors over the coming weeks and months to basically lay out, this master strategic plan as we go forward.
The way I understand this Blue Water transaction is, so there's a syndicate of buyers that will own the 50% of Blue Water, but those buyers will trade MSR's assets and they will bring business onto the platform. That's having an incentive to make it, to do business and making it more valuable overall.
Well, it's part of the word strategy or strategic. it not only is going to benefit us because they are investors and they do transact, but most importantly, if you think about it from their perspective, they love the platform, they love what we're doing. They will also not only get a return on their investment, but of their investment by virtue of them owning, an equity piece in it. And they fully realize that this is a business that's going to continue to grow in a material way. I mean, we've got a large conference taking place in Atlanta with the Mortgage Collaborative, and there's millions and millions of loans that are being traded, on an annual basis there. We so hope to captivate that in a material way. The full insurance product on due diligence that we hope to continue to fortify, in addition to what we've already done that way. So, I mean, there's just so many things that are happening. And as I said before, there's lots of juices being thrown around between, what happened with Blue Water and, and their leadership. But, as I said to everyone, the most important thing that everybody needs is to be able to, to do the right thing. What is in the best interest of Voxtur shareholders? So you take out the emotion, you extrapolate that out, you build discipline, you build structure, and you build a foundation on how you go forward making money. And so regardless of what happened, business, and profits doesn't have a face or name. It's always flows to the path of least resistance. So what we're doing, and what we will always continue to do, is to take emotion out of the game and take personal out of the game and do what is the right thing for the shareholders of Voxtur.
Okay, great. Can you give us an update on title, real tax business, and valuation?
Sure. Valuation continues to focus on two things. One is our direct appraisal. We have one of the largest wholesale lenders in the marketplace that are using that explicitly and exclusively, and that's been a tremendous success. We're continuing to roll out that basic platform to other new clients, and part and parcel of us being able to do that is to become SOC 2 Type 2 compliant. And so, certainly by the end of this summer, we'll have met all of the conditions, and then it will go to testing. And so we're right around the corner from that. And being SOC 2 Type 2 is imperative if you're dealing with large lending institutions. And so, that's going to be a big step for us to go forward. So I love what we're doing there. We're continuing to expand on our relationships with the appraisers and provide, reports and things like that to them. And then, the second half of the equation is what we call, the sketch and the floor plan layouts. So, the valuation team have built a data collection tool that's been, accepted and approved by the GSEs. We will be integrating our sketch and floor plan layout to that. And so in 2025, we think that we will have the only web-based technology that exists that provides sketching, floor plan layouts, again, web-based, along with a data collection tool that will replace some appraisals that are being done now. Ultimately, we think over the next 24 months, it could be as much as 50% of the total valuation will go that way. But it's certainly in the hands of the lenders adopting that policy, and certainly it has been endorsed and approved by Fannie Freddie. So, we think that that's a big growth. So that's our valuation, in Valuation 101 and what we're doing. On the title, we're continuing to digitize the whole lending platform. So we've done our pre-docs. We're effectively testing and rolling out with 3 small companies our starter kits, which we talked about, and certainly by the fall we should be well on our way. We've had many discussions with some very strategic partners in that title side of the business. Jim Adams, who has taken the title business over, along with Ryan Marshall, have done an outstanding job as to get us to a new place that doesn't exist elsewhere. We've got products right now with AI built into them that give you instant title. And yes, that does include AOL. And yes, it does, include, regular title. And quite frankly, we think we found a very happy medium place with the evolution of our marketplace that we have created for title. And so what we're able to do is identify not only what is the best policy at the best price, but what is the best offering in that particular for that particular transaction. And so it incorporates a whole bunch of AI, a whole bunch of data, that is that we've benefited from because of our our data platform, PC, the former Benutech. And so we really like where we're going, and we think that it's something really special. And I would say to you, over the next coming weeks, we'll have some news that will, basically augment what I'm saying right now. But there's a massively huge opportunity for us to take a place. Now, as you all know, when we originally bought the title business, it was coming out of the pandemic. That particular business was making a couple $1 million a month, and we felt that with the advent of the pandemic dissipating, that it would roll back to normal conditions and back to being a profitable business. It'll be a very creative acquisition. Well, pandemic rolled into moratoriums for for the homeowners, and so therefore defaults, bankruptcies were, deferred or in most cases disappeared. Why? Because all of a sudden houses rose, 25, 30, 40% during that time period. And so people were normally would be in default and maybe go into bankruptcy, all of a sudden had a whack of equity in their house because of the appreciation. So rather than defaulting and going into bankruptcy, they sold it and they still left with equity in their properties. So hence that business dissipated in a material way. Why we then decided to roll into the technology piece, because even though the market had been suppressed because of the defaults, we found a new marketplace that wasn't really being challenged in the technology way in which we have built. We talked to a number of title insurance providers. Love what they do. They're buying our title toolbox and our Revo Gateway, and we'll continue to do that. We're continuing to roll out our E&O platform. It's a good business that's going to really define who we are, but it's not overnight. But Jim and Ryan have done an outstanding job, and just stay tuned because we think that we've got news that will come out in 2024 that will, basically show what a difference it makes. From a tax standpoint, we still remain extremely excited. Jeff Young, who runs that tax business, has indicated that we should expect some good news in August, with respect to some announcements. But, when you're dealing with government bodies, it takes time and you have to have the patience of Job. And while we have remained steadfast as far as the applicability and the relevancy of that project, we have to wait. And so we're hoping, again, this fall, maybe in weeks, that we'll have some news there and that will roll out and that will make that that tax piece very, very valuable. So, we got tax, we got valuation, we have title, we still have our data piece of Benutech, which continues to build new products and roll it out, and steady, profitable business that is really, really augmented by one of the most important assets, and that is our access to data. And so we're very happy that we have that.
Now, some of the people that will watch this interview, I think, will be new. Can you just take a few moments to describe what Blue Water does? The fifth, because it's an important piece.
So Blue Water is a trading platform for loans in the residential mortgage space. So they trade in mortgage servicing rights. So that's basically, self-explanatory. The administration in paying off mortgages, right? And so they trade those rights on a daily basis. They get involved in the trading of portfolios, whether it's whole loans, or non-QM, non-qualified mortgages. We continue to do that. And in the process, Al and his team, because they are trading, you do have to do due diligence on it. So they build a technology piece that basically services the pre and post close due diligence, on those loans. And again, everything is done through technology. Historically, on a medium-sized loan package, you could have as much as 50 people. Take 6 weeks to facilitate that, where Al can do it in 10 seconds. And so that group is continuing to add new clients who are using our technology platform to trade. We have the market cornered with respect to the clients that we have right now that are using Al's technology piece. So we're going to continue to grow. He's expanding that whole trading platform, and everybody knows about tokenization. Well, things have changed, and the world knows, and the government knows that they now have to, buckle down and be disciplined on people buying tokens and having real assets to be able to, augment or back that token. And so essentially what some of the governments have done is saying that we need to identify what those assets are. So now Al has found an opportunity to play in the tokenization space, and those tokens will be backed by real hard assets. And that is mortgage servicing rights or the trading of loan packages. And so he has went through all of the necessary regulatory requirements, the structural and technology setups, and we expect this fall to start trading loans vis-a-vis through tokenization. We will not own the tokens. We're actually trading our real assets and getting paid and trading in real dollars, but the actual assets will be backed by tokens. So for us, we get paid the way we can normally get paid by everybody, but it will now become a very material play in the tokenization space, and we are at the forefront of that. So that's kind of it. He, like I said before, he also built a pre and post close due diligence. He does hedging, pricing on these loans. So everything is an offset from our trading platform.
Okay, so in summary, congratulations on yesterday's press release. Thank you for the update on all the other businesses. Any final thoughts before we finish?
Well, I mean, there's lots of things going on, but you can expect over the next coming days or weeks a change, in the leadership. I mean, everybody knows that I took this on when Mr. Albertelli left, and for the last 15 months, I was the executive chairman, and I took on the dual role. And so we will be appointing a new CEO. I guarantee you this, that individual will have massive experience, in the residential, mortgage space and loan space, in North America. They will have knowledge of mortgage warehousing, of title, of valuation, of coding, of development, of connections in the whole real estate brokerage and agency space. I know that this dissident group says they continue to monitor us with respect to our exposure in our space. I came on as a CEO, as you know, at a time when it was badly needed, and my focus at that time was to create some currency so we could remove the debt, check off. My experience over that 12 months was to try and right size this business, hence went from 525 people to less than 200. The new CEO will roll out a new structure for Voxtur, so there'll be more accountability, and so I'm looking forward to that. And having said that, I go back to the role that I think that I'm best at. and that is dealing with the capital markets, dealing with investors, dealing with the banking industry, focusing in on strategy and vision. We still got so much to do. And basically all of that had to take a back seat while we were kind of restructuring this company. So I think I'm personally extremely excited about a new CEO coming on, allowing me the time and the energy to not take my hands off the wheel, but this company will will be unbelievably served with a new CEO coming on, and it certainly because of your support, that will certainly give that individual all the opportunity for you and your investors to be able to lay out the strategy and the vision that is going to be rolled out. It is just an amazing opportunity and a very exciting time to come on as a new CEO, especially since we've got the debt cleared. We've right-sized the company, and I think we've got a lot of really great things, exciting things ahead of us. Not 100% out of the we'll call it challenges yet. I mean, we do have to close this deal. We do have to finalize the syndication and who's participating in it. That should be done, over the next week and a half or so. We're hoping to close by the end of August because it comes, as quick as quicker than you know it. And I can't say enough about the support that the Bank of Montreal has given us. It's certainly not normal. We've went above and beyond in wearing out our welcome as far as them having to support us to get us through this. And so they've been amazing. And I think that the reason is that, when you have been a good character and good moral fiber and delivered historically in the past, it certainly serves as a good, basis for how you're going to be treated going forward. And so I gave my pledge to the Bank of Montreal that we would, remove this debt or get it materially, under control. I think that they're, extremely happy because most people would throw in a key and say, good luck, it's all yours. We were never that way. Yes, we had to clean some things up, and it hasn't been easy. But this is a really fundamentally great company with really interesting technology at the cusp and the forefront of changing this industry as we know it. So nothing but
and we are
exciting times.
and we are about to see the Fed lower interest rates, which should be interesting.
Certainly doesn't hurt, does it?
Yeah. All right, Gary, thank you very much for doing this.
Okay, thanks for having me.